You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Tuesday, the 21st of February 2017. Why Tuesday? Because Monday the markets are closed. Surprise if you didn't know that. Let's jump right into these charts. For the record, stocks are up for the day on Friday. That's both the S&P 500 index as depicted by SPY and the Qs, which is the NASDAQ 100, the tech stocks. We see that also up are bonds. Remember our vertical weekly crossover that happened on the week ending on the 3rd of February. We'll talk more about that in just a minute. That's back in play again. We love our vertical weekly crossovers. They are prescient. And gold is the only thing we see down as depicted by GLD. Now let's go back to stocks. We will start our analysis for the past week and the coming week with SPY on our weekly chart. For those of you who are using the daily market worksheets, and if you aren't, why are you listening to our podcast? If you care about spending your time wisely, you need to subscribe. It's free, doesn't cost you anything. With that subscription, you will get the daily market worksheet, a link to that. In fact, we're about ready to put out a book that's going to have enough for 3 months at a time. It'll be your own workbook. But in the meantime, go sign up for our newsletter at chartingwealth.com. We'll send you a link so you can print out your own daily market worksheets. They supercharge your training. We recommend it. Those of you with them, you need to go ahead and mark that your daily market worksheet, as far as the S&P 500 goes, the direction of the weekly chart on the price percent oscillator and on the derivative oscillator is up. Draw an up arrow in that open circle. And what do we see going on? Well, we had a vertical weekly crossover all the way back on the 25th of November. We then saw the 2-day chart cross over going up. Okay, that happened on or about Friday the 10th of February. Now, if we delve into exactly what's been going on, we see that vertical crossover. Yes, indeed, it occurred on the 2-day chart back on the 10th of February. And we saw at the same time, we went from a negative red on the derivative oscillator to a positive green, and it's been continuing to build. Now, we're going to check out the last thing we need, and that is the 2-hour chart. What is it doing? Well, it's still in its pullback, which is wonderful. We needed it to do that. It started its pullback at 4 p.m. on Thursday the 16th. So it is going down at this time. We are waiting for there to be enough upward pressure to rotate the PPO, that's the price percent oscillator, back to going up, like it looked back on the 9th when it crossed over going up. The problem back then, and the reason we did not get in, is because our 2-day chart had not yet crossed over going up. We had a little schizophrenia going on. Well, that's changed now. The 2-day chart's in an up move. Remember, our rule is when we're doing our traditional type of trend following, you wait for the weekly and the 2-day to be going in the same direction. Then you wait for a pullback. That is, the 2-hour chart moves in the opposite direction of the 2 larger charts. And then when it crosses back over going up, it's your safest point to jump in and trend follow. That's what we're practicing and looking for. That may happen at the beginning of the week on Tuesday the 21st. It may not. If it doesn't happen, you don't have a trade. You just keep your money, that is your virtual dollars, in your trading account, and you wait to see what sets up. We got 4 charts to go through. So if it happens, it happens. If it doesn't, you keep your powder dry. Remember, first rule, don't lose money. Second rule, make money by trend following. We don't forecast stuff and tell God what the world is going to do. God tells us what the world is going to do. What we do is we trend follow. Once the good Lord shows us things moving in one direction and all of our indicators set up, then we can most safely, not totally safely, there are no guarantees here. If there were, everybody would be a millionaire. No, in fact, nobody would. So what are we doing? We are trend following. We're looking for a trend to set up. Mark on your daily market worksheets. Under actions, you're going to watch at the beginning of the week to see if there's a crossover on the 2-hour chart so that you can jump into SPY on a practice trade. What it's all about. Now, let's keep moving through these charts. Is that making sense? It's supposed to, folks, because it's dirt simple. It's easy. If you don't know what we're talking about totally, probably means you haven't listened to the 15-minute How to Read a Stock Chart video. And again, sign up for the newsletter. You get the link to that also, along with the daily market worksheet, along with the layout that we use at freestockcharts.com was exactly what you're seeing in front of you now. If you're watching the video podcast, if you're listening in audio, that's what I'm describing. So appreciate you being with us either way, audio or video. Now let's keep moving. We're going to the Qs next in order, the order we always go. Again, the Qs are the cubes. The QQQ, that is the symbol, the three-letter symbol. It stands for the NASDAQ 100. What do we see going on there? Well, we had a crossover, a weekly crossover, back on the 6th of January. We actually jumped in on a beautiful trade after the weekly vertical crossover. That following Monday morning, that would have been the 9th of January, and it has rocketed up. In fact, for those of you who jumped into the weekly, we continue to watch this weekly accelerate, and it is beautiful. We have seen the derivative oscillator continue to spike up in its power and intensity, and we have seen the PPO, the price percent oscillator, continue to spike up. It has been gorgeous. It has been an incredible run that we have seen happen, and lots of dollars in our virtual accounts as we have watched things just continue to rocket from somewhere around the entry point of 118, 119, something like that, up to 128.78. Beautiful. So what do we have going on as we start delving into it? Well, we had a trade that popped up later on our traditional method when we had a crossover going up on the 2-hour chart. That entry point actually happened back on Wednesday, the 1st of February, and it has continued to move up, 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 up. Now, what happened recently? Well, we saw on the 2-hour chart a crossover going down on that 2-hour chart at 10 a.m. on Friday the 17th. Now, those of you who are super cautious, what should you have done? Well, if you jumped in, particularly on the 2-hour trade, that was your signal to jump out and see what happens. Now, you can not jump out. And in fact, the jumping out point was actually 10:30. Remember, we never do trades before idiot hour is over. When idiot hour is over at 12:30, the jumping out point was 129.17. The market ended up 129.82, but our indicators show us that indeed we broke through the 2-hour trend line and it's a jumping out point. Now, did you have to? No. The market continued to go up over the rest of the day, but what's happening on the 2-hour chart? Well, it crossed over going down, which was your trigger to jump out. Did you have to? No. If you wanted to be super cautious, could you have? Yes. Is it time to jump back in? No. Will it be on Tuesday? Maybe. It could be a portend that it does not cross back over and it continues to move down. What if it continues to move up, even though it stays crossed over going down? Well, you have what's called a divergence. That means that you have a divergence in price and the indicator, which means, again, that there's really nothing holding that price up and it's more likely to roll back over. Folks, we have no guarantees in this. We do what we can based upon the information that we have. And our indicators say, get out on the 2-hour trade. What do the indicators say if you got in on the weekly trade? Well, they don't really tell you. In fact, if you look back at the 2-day chart, which is continuing to rocket up, it looks great. If you look at the weekly chart, which continues to rocket up, it looks phenomenal. So I mean, the candle's still above the Bollinger Bands. Things look great. But again, depending on your level of risk that you wish to take and how quickly you want to lock in your reward. Well, this is not even quickly locking in your rewards. Hell, things crossed over going up at the beginning of the month. It's been an incredible run. So you pull out a little early. Maybe it tops for another week or two. Maybe it goes up another $10. Have you seen how much it already went up since you got in? I mean, greed will kill the cat. So you can make up your own mind as to what you want to do. And remember, we're not a stock calling service. You're not spending real money. You're practicing. So practice. Give it a shot. Get out. See what happens. Stay in. See what happens. Do whatever you feel that you need to do, that you would do if you had real money in the market. Do that. Practice that. And remember, you can be very happy. You got in with an incredible, let's see, what was it? Somewhere around 125 and it's up to 129. Are you kidding me? You're up, well, almost 129.50. So you're up literally $4.50 over the course of, what, 2 weeks? Absolutely, not even 2 weeks, absolutely phenomenal. So don't get greedy. I mean, when you start seeing these kind of returns, don't get greedy. Get smart, because one thing can happen. You can lose it all. And don't ever think, well, it was this high, and when it gets that high again, I'll cash out. A lot of times that never happens, my friends. Now, we've seen a great run up over the last few weeks. This is not normal, but when it does happen, follow it. When your weekly vertical crossovers are working so phenomenally well, and this is the fat season, the fat time of year during this trading zone, enjoy it. Enjoy it. Take advantage of it. Practice it. Because the hard times are coming. They always are coming. Now, let's go back to our weekly chart, and we're going to move on and take a look at another fascinating chart. TBT, what is that? Well, that is the 20-year bond fund. And we had something interesting happen in that. We had a vertical crossover on our weekly chart occur. When did that happen? It happened back on the week ending the 3rd of February. So then what happened after that? Well, we had a jumping in point the following Monday. That would have been the 6th. And when the entry point occurred, in fact, we had a decent week. Actually, the market moved up to a high of 122.27 from an opening of 119.98. So what is that? About $1.50, something like that. We had a good jumping in point and a nice run. Then what happened? Well, as you look at the weekly chart, looks like things just continued, if you just look at the indicators, to do well. The PPO continues to build energy moving up, and the derivative oscillator continues to build energy, and the PPO, the price percent oscillator, also continues to slant upwards. But when we look at price action, things are a little different, particularly over the course of the last week. What did we see go on? Well, from our jumping in point, we saw again, this was primarily a weekly vertical crossover. We saw that weekly vertical crossover occur, like we said, the week ending February the 3rd, and then we had a jumping in point there on the 6th, and the market did boom up over the next 2 days. Then it started to move down, the next two two-day candles, then started to move down over the next two two-day candles, then started moving up over the last 2-day candle. So what's actually going on? Well, we're sliding sideways quite a bit, but we're still above, the PPO's still above on the 2-day trend line. We can see a little bit more when we jump into the 2-hour chart. And here's what's interesting about the strength of the tsunami that is the weekly vertical crossover in most instances. Again, jumping in point was at 10:30 on Monday morning, the 6th, somewhere between about 119 or so. And then what happened? Market took off with that tsunami of the weekly vertical crossover hitting and hit up to a high of 122.27. So again, yeah, that's what about $2.27. A nice on a $119 ETF. Nice return there over the course of about a day and a half. But then what happened? It started losing energy and actually crossed over going down. Now, those of you who are into safety and worried about losing what you had, well, if you got in at 119 and it crossed back over going down, you could have sold somewhere around 120, 121, 32, 120, 66, something like that. That would have meant that you would have gotten out when the crossover around 4 o'clock or so, or around 4 o'clock, late in the day, after the crossover was secured on Thursday. You could have gotten out and secured about $1, maybe $2 in profit, okay? That is if you wanted to. And then what happened? Well, the market continued to trundle down, and it hit a bottom. And then what happened on the 2-day chart at 2 p.m., I'm sorry, the 2-hour chart at 2 p.m. on Thursday? We had a crossover again going back up, again triggering an entry point. So you could have gotten in, ridden up about $2. When it crossed over going down, gotten out, taken your $2, roughly, $1.50, $2, and let it bottom out and then jump back in again and start riding it, because it never lost the momentum on the weekly and on the 2-day chart. They both continued to move up. Is it the strongest up movement on that 2-day chart? No, but this is the kind of thing you need to practice. Now, you could have just said, the hell with it. As long as a weekly chart looks good, I'm going to stay in. I'll drop out when I have a 5% loss. Maybe a 1% loss, maybe a 2% loss, whatever it is that you want to sustain, but you may just let it ride as long as the weekly chart looks good. Or you can spend a whole lot of time and energy and keep looking at the 2-hour chart, getting in and out, or you can, depending on the kind of time you have, you can just pay attention to the 2-hour chart and let it be your guide. It would say, stay in until you have a crossover on it. So and we talk about this all the time. We're not here to tell you what to do with your practice trades. We're here to tell you what's going on and help you develop whatever mindset and time frame periods you have the ability to control. If you've got a tough job and you're a litigator and you're in court all the time and you can only check the charts once a day, or maybe less than that, maybe after hours, then maybe all you want to play with are the weekly vertical crossovers. If you've got a little more time, maybe you've got a job and you work for a convenience store and your schedule rotates, you may have different times you can do different things. Whatever it is you do, whatever it is you're interested in, figure out what works in your schedule. That's why we encourage you to be with us every day for at least 10 minutes to figure out what's going on, to practice this stuff. Isn't this fun? Isn't it fascinating? I mean, when you start realizing if you get good at this, how much you can really do. I mean, if you start, and we've not ever even touched one of my favorite things, which are options, which are absolutely beautiful. And people, that just frightens the hell out of most people. It shouldn't, but it does. And we will get into that later when we move on down the line, after we really get a bigger cadre of people that really are serious about being with us every day and following. I know we've got 1,000 plus folks. We got 4,000. Let's say our metrics show anywhere between 4,000 and 10,000. But again, I want a really solid group of people that are fascinated by this and are willing to do the 10 minutes worth of work on that daily market worksheet every day. We will carry you along. Okay, now let's go to our last chart. because we're getting long in the tooth here. Okay, the last chart we have is gold. And of course, gold, again, beautiful for us. What do we have? About I think we had a 3.15% gain on the Qs, the NASDAQ 100 for just January. We had a 2% gain on gold just for January. Of course, on our weekly chart, we had our crossover in gold on the 27th. That's when the vertical crossover occurred on January. And of course, that jumping in point was the next day. And we have seen gold continue to move up nicely. We continue to see a move up. Our prices are above the weekly trend line in gold. We look at the stair steps of the derivative oscillator. We look how nicely the price percent oscillator continues to move up. Things look great, at least on the weekly chart. Now, when we go from the weekly chart to the 2-day chart, what do we see? Well, we're still above. We'll adjust that a little bit. We're above our 2-day trend line in the 2-day chart. What do we see happening though? And you could portend it a little bit when you saw that red open box candle on gold on the weekly chart. We've had it sliding sideways, and we see that our PPO, a price percent oscillator, is really sliding sideways. Derivative oscillators lost a lot of its energy. We've had a nice run up in gold. We have done so well in gold. Even had a jumping in point back around, let's see, if we go to our, we're going to go to our 2-hour chart, and you can see the green crossover where we had the jumping in point in gold. That occurred on the 30th of January at noon. We had that jumping in point. Gold spiked up, then crossed over going down. And again, for those of you who wanted to jump out, you could have jumped out then, could have ridden gold up quite nicely from an entry point back on the 30th of January at the opening at 113.49. You could have ridden gold all the way up till it crossed over going down. Your worst exit point would have been the low at 117.22. So what is that, $4? Beautiful over the course of 10 days. 11 days, incredible. Then you could have let gold settle out. Then you could have jumped back into gold. And you would have jumped back in. Again, it was getting long in the tooth and starting to slide sideways, but you could have gotten in there, the opening at 117. Now, what did it do? Well, it ended up hitting a high of 118, not much higher, 117.20, then 118, and then has started to slide again. What do we see happening? Well, we don't know yet. Hasn't crossed over. Could pop up on Monday, but you need to pay attention to that. If you're still in gold, do pay attention to what's going on. We do have a bit of a divergence. Gold hit higher highs. Well, it's awfully close. It hit about where it hit back on the 9th, and we saw a huge bump up in our PPO. Hit about the same price level, but much lower on the PPO. So again, not a whole lot necessarily holding that up. So be careful. Get ready, if you start seeing it particularly punch through the 2-day trend line, to consider ending your gold trade until you see better indicators. So watch gold at the beginning of the week on Tuesday. Remember, again, the market doesn't open Monday, it's open Tuesday the 21st. So hasn't it been a fascinating week, and aren't we excited about this great trade, huge run-up we have had in the Qs, whether you jumped in on the 2-hour entry point after the pullback, or you jumped in on the vertical weekly crossover. Either one of those, wonderfully profitable for your virtual trade. And of course, the same with gold, and the potential for profitability in the bonds also in TLT. So again, continue to think about these things, continue to practice. If you don't practice and you're not filling out your daily market worksheet, you haven't opened up in any of the online brokerage accounts a free virtual trading account. You can do that anywhere. You can do that at Options Express, Options House, TD Ameritrade, Schwab. I mean, I could just keep naming all the different online brokers. They all have platforms that when I first started trading 15 years ago or something, they were really sucky. They're really good now. They are so much better and so much like the real market as far as purchasing and selling and all that, and giving you accurate prices. So you need to have a virtual trading account. You need to be practicing, because that's what's going to make you good. Perfect practice makes perfect. How do you get to Carnegie Hall? Practice. How do you get to wealth and riches when it comes to the stock market? Practice. Learn how to read these charts. Okay, lastly, we're going to wrap things up. Let me pull up my notes. These are things you need to pay attention to. Remember, this is the daily market review and forecast. So we've been talking about what you need to look for in the coming week. We also want to tell you about major U.S. economic reports that can affect things. Remember, market closed Monday the 20th. On Tuesday, a couple of things happening. Market Services PMI, that's going to be out at 9:45 in the morning. Also, that's going to be both the Services PMI and the Manufacturing PMI. Those flashes are going to be out at 9:45 on Tuesday the 21st. If they're particularly good or bad, they can have something to do with things. But again, I'm not freaking out about that. What's really important is what happens at 2 p.m. on Wednesday. The FOMC minutes are going to be released. That's a Federal Open Market Committee. That is the Federal Reserve, the Fed, the people who control your lives and mine that we didn't elect. Janet Yellen and company. Well, their minutes are going to be the thing that could roil the markets the most. Really, really good news, really, really bad news, whatever, however it's interpreted by the market. So just be cognizant of that and careful of it, and put that on your calendar. Put that in your notes. Flip ahead to the notes you're going to be filling out for that day on Wednesday, and make sure to note that down and just see what impact you see in the charts at 2 p.m. or before that, or maybe the way the day starts, how it plays out. You need to watch how these things impact the market. Also, that same day at 10 a.m., so 4 hours earlier, right as the market gets going, existing home sales going to be released. Who knows? Super good, super bad. It may have an impact. Then on Thursday, two things are going to happen at 8:30. The Chicago Fed's National Activity Index is going to be released for January, and the weekly jobless claims are going to be released. That is for the prior week for 2/17. So again, super bad stuff, super good stuff. It can have some impact. The real thing for the week, what happens with those Fed minutes coming out. And then on Friday, you're going to have new home sales released. Remember, everything seems to be controlled, or I remember the days when it didn't really matter what was going on in the world, but what was happening with a housing market. Again, on Friday, you're going to have new home sales going to be released at 10 a.m., and the Consumer Sentiment Index is going to be released. So again, super bad, super good news. It can affect things. Pay attention and just see how that affects the markets. That is where we are, my friends. I've got one other special thing I wanted to tell you about. We have just started our own weekly alert system. We're going to actually be sending out for you weekly vertical crossovers and links to the various things that we're putting on, and we're going to be doing that via text messages. We're committing ourselves to not do more than 6 to 8 text messages a month. We're not going to put out a podcast and then start firing off things, filling your phone up with crap. But we do want to be able to send you valuable stuff and things that you can use. And again, not going to be sold for advertising to anybody else. You know how we are, those of you who've been with us. Have we filled you up with junk in your email? Absolutely not. So let me tell you how to do that. You need to text the words Charting Wealth as one word, Charting Wealth, to the number 33222 on your cell phone. That's text Charting Wealth to, that is TO, the number 33222. If you will text Charting Wealth to 33222, we will then sign you up for our service, and we will update you on the important things you need to know about changes in the market, particularly with the weekly vertical crossovers. That's where the real big money is. So, thank you so much, my friends. It's always a pleasure to be with you. Thank you for listening to our comprehensive review and forecast. Hope that you have a great market holiday. I know most of us will be working, except for those guys on Wall Street, but we love to hear from you. Always follow us at chartingwealth.com across the board. Charting Wealth on Facebook, Twitter, Instagram, YouTube. We very much appreciate you subscribing to our YouTube channel and, of course, going to iTunes and subscribing to us there. You can do that, and you can give us a 5-star rating and say something wonderful about us. We so appreciate it. God bless you from chartingwealth.com.